The Governor of the Bank of England, Mervyn King, was speaking before a Treasury Select Committee meeting in London. His views on the current situation.
Thank you very much, Chairman. Good morning to everyone. There are now signs that growth has resumed in the third quarter. Inflation over the next year is likely to be volatile, but looking further ahead, the strength and sustainability of the recovery is highly uncertain, and the balance of risks to inflation around the 2% target remains on the downside. Money spending fell by over 4% in the year to 2009 Q2, and real activity fell by 5.5%. Most of our major trading partners have experienced similar falls in demand. But both at home and abroad, there are now signs that activity is picking up. The key question facing the Monetary Policy Committee is whether this recovery will prove to be sufficiently strong and sustained to keep inflation on track to meet our 2% target. The consequences of the financial crisis, sparked by the failure of Lehman Brothers exactly a year ago today, will be pervasive and long-lasting. That is not to say that growth cannot resume. In some countries it already has, and in others it will. But there is a long, hard road ahead to restructure our financial sector.
He was asked if the UK was slowly coming out of recession.
I think the big picture is that most of the developed economies are in the same boat, with very sharp falls in output at the same order of magnitude at the end of last year and the beginning of this. Those falls in output have broadly come to an end, and we're beginning to see some very small signs of positive growth. But I think it's important to remember that the very small positive growth rates or small falls in output in other countries in the second and possibly the third quarters are really very small in comparison with the sharp fall in output that took place at the end of last year and the beginning of this. So there's a long way to go before the level of output gets back to where it was. And I think that the quarterly figures get revised. I mean, even now you can see in the UK that the figures have been revised once. They may well be revised again on the basis of information that's been published. And where they will come out in 2 or 3 years' time, when we get a more stable set of data, no one can really tell. So I think the big picture is the similarity of experience across the major developed economies.
Cautious but realistic words amid small signs of recovery.